What's going on, everybody? This is Jordan with Conquer Trading and Investing, and we're about to do our technical analysis and outlook for the S&P 500. I'm looking at a chart here of the S&P 500 index. Whether or not you trade the SPY or any other vehicle, this analysis is going to give you the edge you need. Do follow along with me. Before we get into the chart, we're going to look at a couple of interesting charts and a thread that I really want to share with you today. Right now, first, before we do, let me recap where we are right now. Currently, let me drop down to the 1 hour time frame with you. Currently today, we have taken out hard this support at 28.89. You could see this was on Wednesday, FOMC day. We really go ahead and set this resistance off as support, traded up through FOMC, and then since have been peeling off. Now, Thursday after the market closed, after seeing the current video on the S&P 500, there were a few different traders asking how come we weren't leaning into this support over here, this strong support, and looking to buy off it. Now, the reason was because, again, this was FOMC day. What happened on FOMC day, there were trades in the morning when this support held. After that, there was a place for a re-entry. All of these were called out in real time during the live stream. If you have not joined us yet for a live stream, we live stream every day, Monday through Friday at 9 o'clock a.m. Eastern Time, a half hour before the U.S. equity markets open. And the first thing that we do every day is take a look at the S&P 500. So if anyone at the start of the day is wondering what is going on, do go ahead and watch the first 5 or 10 minutes of our live streams. It's going to go over what is currently going on the S&P and give you a plan for the session ahead. Now, obviously, when you're in a trade that is 70 or 60 points into profit, right? You have to be monitoring that trade. Now, we didn't come all the way up into the resistance line that I had above. And while we're here, you could see this was where we topped out over here. If I put my mouse over there and you go to the left, you could see this was also the bottom. Now, this resistance line was put in when right around the time we were getting ready to break out this resistance, which we turned to support. Now I could see what the market has done. I could go ahead and move that down to where the resistance is now currently in the market. And if you go ahead and you look, you see that's where this was support. So now I have this as a reference going forward. Let me look down now at the 1 hour. Traders were wondering why I'm not leaning into this support to buy. Listen, the reason was because after seeing the FOMC move faded, right? Asia, London, and then through New York, I wanted to get a little bit more of a view of what was going to happen. After seeing the FOMC move faded, I wasn't ready to buy off support because that's not really such a positive sign. Because of that, the best trade to do was to sit back, get neutral, wait, and watch. Wait for something to build out that's clear and then take advantage of it. This was not clear. There's no way that the market should have retraced if everything was good, the entire FOMC move plus more. So I said I'm going to stand aside, right? What happened? In that video, I gave a few different levels that I was watching before I would get ready to act, including this trend line over here and this line of support all the way down here, now at 28.09. Now, it is very important at the end of the day, you tighten up your support and resistance lines. You make sure that if something has flipped from support to resistance, you go ahead and you get those colors right for going forward. If you look at what happened over here in the market, you could see, look, this was support. Look at the support down over here now. This is what's happening right now, and this was resistance earlier in the session. This is pre-market. I can move this up a little bit. Now that is the most precise level that I could be working off of going forward. The question is where we are right now and where are we going? This is what we need to really focus on. I've now explained to you why I went neutral, why I wasn't looking to buy off of this support over here, why I thought it was a better idea to be on the sidelines waiting and watching. And now we're going to look at where we are today. Now, it seems to me that a lot of people are looking always to be in a trade. If you're looking to force the market upon you instead of trading what's happening in the market, you're really setting yourself up for failure. You're going to have a very difficult time. You're better off really waiting and watching till something becomes abundantly clear. If you ever notice that when you get yourself into a position, and a position that you probably shouldn't have gotten into, you find yourself really attentively watching the market, and then you say to yourself, wow, if I would have waited to now, this would have been the time to enter. That's exactly how you want to approach the markets, except you don't want to enter a trade to be watching the market to know when to enter. You want to watch the market that intently until you say to yourself, this is my entry point. That is how you go about it. Now, here we are today. Before we get into what we're looking at right now, what is the game plan going into Monday, what levels are important, and what we are watching, let's take a look at some charts, and most importantly, the thread that I do want to share with you since we have a little bit more time as the markets are now closed. This was a tweet. I wasn't following Julian prior to this tweet. I am now. It's very interesting. He's showing the past 6 business cycles, and he's comparing it with the current business cycle, and then he's showing where we are in that current business cycle and saying that we have pretty far to go before things will bottom out. Now, the reason I brought this up is because we're going to look at a very interesting thread that I think is really going to open up a lot of people's eyes. It's something that I enjoyed reading. I agree with it wholeheartedly, and I want to share it with you. Before we get there, just a quick glance at S&P share repurchases, buybacks, and you could see that they're expected to go way down in 2020. Now, granted, if companies are not there to be providing share buybacks, we do know that the Fed is providing a bunch of liquidity. We do know that Powell has hinted that the Fed is ready to step in and buy stocks directly if needed. That's not going to happen, obviously, unless stocks trade down and test and break the March lows. Now, here's the thread that I definitely want to get into. It's really important. This is by user Josh Wolf, and it's called, let me go ahead and follow Josh here, actually. And it's called Liquidity versus Solvency. And this is really important. It's really going to open your eyes to better understand the situation that we're currently in. He says at a market level, government bond buying can solve liquidity by buying bonds and propping up prices with no bids. But at a company level, they cannot solve solvency when growing debts exceed the ability to pay them, right? Of the roughly $5 trillion of asset purchases in the past few weeks, $5 trillion, the Fed did 50% of it. Before COVID, 1 in 6 US companies couldn't meet interest payments on debt. They couldn't just meet the interest payments on their debt. Forget about the principal. 1 in 6 companies, now 50% of all companies may not make May rent payments with plummeting revenues. Think about that. 50% of all companies are not able to make their May rent. And obviously, with the state of the economy, they have no revenue coming in. Now, with declining revenues and record numbers of these loans mixed together in CDOs, the risk of a cascade of debt defaults plus bankruptcies seems very likely. The bulls say that's priced in already. What Josh is here is saying, the discounting lasting economic destruction, right? When are we opening up the economy? What's that going to look like? How long before things actually return to any semblance of normal? Plus current capital market recovery confounds. Think about it. Hertz, J.Crew, Chesapeake, Neiman Marcus, they are already battered malls they anchor, the suppliers and restaurants that rely on their traffic. Either the market has discounted the destruction, plus rebalancing online occurring to Amazon, or the bankruptcy headlines have not yet hit, and they are coming. Think about it. This was in response to a tweet that Lisa had gone ahead and said that the market feels a lot like Q2 in 2008 before traders realized the true devastation of the time. Think about it. It was Lehman went bankrupt in October of 2008, right? We're talking about here, it might be September, October when things start really falling apart. And he just quoted here highlighted a picture. About half of ordinary U.S. companies will miss their scheduled About half of ordinary U.S. companies will miss half their scheduled rent payments for May, according to private estimates shown to me by bankruptcy lawyers. Let's look at the charts. Let's find out what that all means. I'm going to give you first a little bit of perspective. We were watching this. First of all, this is an atrocious market crash. We've had here the bounce. This was a rising wedge pattern that did break down, and then the market found buyers, has retraced. We broke the trend line going back over here that has kept us on the bearish side, and then took out important resistance, strong resistance up here. Look, support, resistance, resistance. This week we traded above it, but the bulls ran into trouble and are having trouble right now. What is our plan going forward? First of all, before I let you know what our plan is going forward, a lot of traders were looking to make something happen today. You do not always need to be in the market. You should be in the market a lot less often than you are, right? You should be focused in on a few good trades a week when it's abundantly clear. This trade here this week was abundantly clear. So was the other intraday trade we added, and nothing else this week was abundantly clear. In uptrends, we became bullish. This is a test of support. We buy, but you don't always have to buy. We stepped aside because something was not right when the market faded FOMC's move. We stood aside, we watched what happened. Watch what happened before I get into what's next. Let me come down to the 30-minute time frame with you. You could see once we gave up that support, we went all the way down into the next area of support, bounced up, tested that, and confirmed it as resistance, and came down. Well, Jordan, couldn't I go ahead and take those 10 points? Why bother? Why bother? Do you really feel the need to be that active? Do you think by being that active that's a benefit for you or a liability? Be honest with yourself. Are you trading too much? Are you looking to be in the market too often? Are you looking to make things happen that are not there? That's the question you need to ask yourself. Now, after that, what happened? We came out and we took. Here's the test of the support. It held into resistance. This time we broke through, came into our trend line, which is now support, came back up, confirmed this resistance. This is the U.S. market opened. Price going into this was rising above here. A lot of traders in the live stream were getting, feel like they're FOMOing. I reminded them that every day at some point between 9 and 9:30, right, you're going to see a retrace of the current move before the U.S. equities open. That's what happened. This was the move of the day, the small retrace. And then we accelerated down. And then we took out my trend line and are currently rejecting it. But really, we're neutral. I pointed out, and this is what you need to focus on coming into next week. This is what I pointed out. I said, if we got below this trend line over here, and are resuming out of it, I would be looking to enter short coming into this support down here. However, this is where we ended up. This didn't happen in the beginning of the day. This happened about an hour before the close on Friday. Are you looking to enter a position an hour before the close and hold it in through the weekend? Absolutely not. There's no way that you should ever, Friday afternoon, be looking for a position. Okay? Now, where does that leave us going into Monday? We need to see where the market opens, right? We trade the S&P 500 through my Forex broker. It's a CFD. As soon as the markets open up on Sunday, I have the ability to position myself. I could trade in and out if something happens. I don't have to wait for Monday morning for the markets to open. If you haven't given that a try, go ahead and open up a demo and explore. Learn something new. It could benefit you, right? Here's my plan going forward in the week ahead. I have this area that I've outlined for everyone that was completely neutral, right? This is neutral. Now that a break of that trend line and a possible entry did not occur at the right timing on Friday, this is all neutral. A break below this support opens up not only a new bearish bias. Yes, I flipped to a bullish bias. I flipped to a bullish bias above here. Once we confirmed that resistance as support, we were bullish. There was a beautiful trade, N2 over here, and now over here, the rest of the way, I was being completely neutral. I am ready to flip bearish once again because I have no problem trading both sides of the market. If this is what is shown to me next week, if we break this support over here and I get an opportunity to get in, I'm taking it. Below this support over here, this line is blue. This has been a focus point of the market over the past couple of weeks. That's why I have it in here. You could see the resistance. This is local. You could see the support. This level is in play. So if I get short over here, here's where I'm watching how price reacts, what to do with my trade, right? First things first. I don't want to get too far ahead of myself. What about on the upside? If we do get back above this resistance again, 28.89, at that point, I will be looking to go long. There's no question about it. This will mean to me, this is the story that is unfolding. Let me fade back with you, right? Enormous crisis sell-off. Markets bottomed out, Fed's response, and we have slowly drifted up. Break outside the rising wedge, bears took back control, bulls said nope, right? And then once we cleared this strong resistance, this is the story being painted. Now bulls actually have control, FOMC, nope, I'm sorry, faded, right? So right now, the bulls still have an opportunity to take back control over here, right? This is the line. I know people are looking for me to call out levels. I'll be more mindful of that. The support at 28.09 still holds the line here where the bulls have the opportunity to bring this back. And if they're able to get it back over 28.89, the resistance overhead, and flip that into support, the bulls have control. Then the bulls will have control. Right now, it's a battle. We're going to find out who's going to win, right? We have two lines to really focus in on. We have the resistance at 28.89. Bulls get above that. They have control. Bears get below the support at 28.09. They have control. And my bias flips either way. Right now, where does that leave us? Are there any trades while we're in this neutral zone? This is a neutral zone right now, right? Bears have the edge, but the bulls have the edge, but the bears are very close to taking that control. So where are we? Do we have any trades? I think this line here over this resistance right now at 28.58 is very important. You could see that it was in play today on Friday. After we broke down, we've tested it. It's resistance. Is there a strong possibility that we take a look at that line again? Yeah, there's a pretty good possibility, right? If you are rejected off of it, that does open up a short back down into the support at 28.09. Additionally, if you are able to flip that line, you do have a trade back into the 28.89 resistance. So that's a pretty important level next week, 28.58, depending on what happens off of it, because we're in a neutral zone. We are in a neutral zone right now. And that's about halfway, actually, and that's the line where you can play to the upside or to the downside. Once you clear the resistance above 28.89, looking for longs strongly, bulls have control. Once you get below 28.09, bears have control, flip the bias. We're going to play the downside and see where it takes us. At the end of the day, it's only what the market gives. You can't take more than what the market gives, and anyone who took this entry here, once we flipped this resistance into support at 28.89, and anyone who took this trade and got this beautiful entry and or during the live stream picked up an additional entry over here, right, and did not manage their trade and take profit when this started rolling over, then you have to work on how to manage your trade. You don't get into a position and hope that it's going to continue going with you. You have to be... Managing a trade is much more important than entering into it. All right, everyone. Have a beautiful week, and I look forward to sharing more with you next week. Take care, everyone.